Hello friends, welcome to my weekly market view video. The market is so active, that's why I was planning to upload this video before the European session has started. But unfortunately, early in the morning, a big earthquake happened in my country. I live in Turkey. More than 10 cities affected, hundreds of people died and a lot more wounded. So in these kind of days, other things become meaningless. I have been into markets for nearly 10 years, but I have just started this YouTube thing 1 or 2 weeks ago. I wish I had started earlier. I wish I had more subscribers to help more. Sometimes you feel you should do more and you try to do more, but it's not always possible. Anyway, sorry again for uploading the video late, so let's start our market view. Today we are going to talk about possibility of the correction on Bitcoin and try to make price predictions for the following week by looking on-chain data. But before we start, I have to mention a disclaimer that I'm not a financial advisor. This video is not a financial advice. All the contents in this video should consider it as informative and estimated views about the market. When we check the weekly chart, we can clearly see that Bitcoin skyrocketed in the last few weeks without a retracement, and only last week it seemed to lose its momentum to a certain extent. I will talk about the reason why I expect a correction on the market, but firstly I want to evaluate the weekly chart and try to estimate the degree of the correction. Cause corrections are always part of the game and we should take them into consideration and keep our price expectations updated in order to be ready if this kind of correction happens. When we implement a Fibonacci to our weekly chart, it can be clearly seen that we have resistance level up here and possible retracement levels can be seen on the right of the screen. 21k or 20k or even 19k is possible. But I don't expect the retracement that deeper level, and in my opinion, the price level between 21.5k and 21k are possible. I will explain the reasons as well in this video. Okay, let's take a quick look to 4 hours chart. When we check RSI here, we see the imbalance clearly, which is a good indication for a correction on the price. And as you see here, 21.5k was the previous support level. Of course, RSI imbalance is not the only thing that made me think about the correction. So let's try to confirm our resistance and support levels from on-chain data. This is Bitcoin's realized volume profile chart, and we can see that 24 and 27k are resistance levels, but there is not that much liquidity over 24k level. In other words, there is not much money there that market maker want to liquidate. If I were the market maker and wanted to send small investors out of the game, I would definitely target the price below 23k and 21k instead of targeting about 24k, cause it seems there is less liquidity over that price. When we try to confirm this idea with another chart, we can see the liquidity accumulated between the price levels 23k and 23.5k and between 21k and 21.5k. As I said before, the RSI imbalance is not only metric for me to expect a correction. Let me explain this with a few more charts. This is a whale accumulation heat map, and the colors like orange and red indicates the whale's buying positions are more than the selling ones. The cold colors like green and blue is vice versa. According to this chart, for the last few days, whales selling more Bitcoin than buying. Also in this chart, brown and purple colors symbolize the whales, and red symbolizes the small investor. As you see here, whales are selling their Bitcoins to small investors. All the data that we follow shows in the last 1 month indicates that the rise of Bitcoin's price not filled with general interest of all investors around the world. Actually, the rise mostly driven by big investors. You might think that markets always driven by funds and institutions, and you are definitely right. But without attendance of small investors like me or you, we cannot talk about a real bull run. Because there should be someone or ones who will be willing to buy from higher price from the whales, otherwise they cannot make profit. I hope I could manage to explain the market's principle in a way as simple as possible, but it seems that institutions couldn't convince the small investor to start buying. That's why I expect a higher Bitcoin price in the medium term. Otherwise, ordinary investors won't be that willing to buy Bitcoin. Of course, having a bull run is directly related to decisions of the Federal Reserve. Powell on his last speech told that they are gonna keep reducing the balance sheet, and they do so. I mean, they keep burning money as they do for quite some time. And if we check the chart about this point, we clearly see that S&P 500's price not going on the right direction with the Federal Reserve's decision. Cause here on the chart, blue color indicates the S&P's price and it's around 4100, but actually it should be around 3600, cause red color shows that Federal Reserve keeps burning money. When we keep charts history, whenever S&P's price doesn't correlate with the red line, eventually it turns its way to ensure the correlation, and here we can expect a decline on S&P's price, and for this reason of course on Bitcoin's price as well. This chart also made me think about correction on Bitcoin's price. Our final chart has great importance on the near future of US stocks and therefore on Bitcoin's medium-term price. This chart shows the shortage of workers in US economy. Orange color indicates the need of workers and the blue one indicates the number of unemployed. As you see, the industry needs 11 million workers. That means there are still enough jobs for unemployed, cause the amount of unemployed people in US is 5.7 million. And this means that there are still 2 jobs for every 1 unemployed person in US. This might consider it as controversy with the Federal Reserve's action about reducing balance sheet, but actually not. Because when federal banks try to suit the market's condition, this firstly affects the real estates, then PMIs, then inflation starts to decline. After that, financial markets, stocks and cryptos are affected. Next, institutions' profits decline. And then industrial manufacture decreases. And finally, unemployment increases and recession starts. This chart shows that United States economy is still strong and still hot, so this gives an opportunity to Federal Reserve to increase the interest rates to a higher extent to decrease the inflation. If Federal Reserve doesn't end monetary tightening, market cannot start a real bull run. Let me try to explain this in a more simple way. A car needs oil to keep running and move forward. If there is no oil in the tank, it stops. Stocks and cryptos need money to keep moving to a higher level. If Federal Reserve doesn't supply money to the market, they cannot keep buying and stocks start to decline. Markets expect from Federal Reserve to stop increasing the interest rates, and in summer or fall, start again to printing money to prevent the possible recession. Although Powell mentioned several times that they won't decrease the interest rates in 2023, market doesn't want to accept this reality and still prefers believing to other option that Federal Reserve will prefer to monetary expansion and will give to the market the oil that they need to keep running. So time will show us who is right and who is wrong. Me, bearish for short term, bullish for medium term, but can change my mind with the datas, super bullish for the long term. Blockchain is the future. Thanks for watching till the end, I appreciate. See you on next week's Market View video.